about the test controls. So as you're, we are still waiting for a few more participants. Can I know what was the average number of participants for the lecture in the last few weeks? How many shall we wait for before we actually start?
I think there was about this much, maybe 10.
Maybe 10, okay. So let's just have another 2 minutes and then we can start. So, so the first thing we want to talk today is, so for the online quiz, which was done last Thursday. So the average mark was 14.5. So the best mark we have got is 18.5 and the lowest one was 9.5. So today in the consultation time, I've done a few reviews. What I can reflect from the reviews was, so on each of the 4 topics, each of the topics in the 4 lectures, people did make mistakes. The areas usually attract problems is, the first one is the elements of assurance engagement. So I think you need to record what are the 5 elements. You do need to understand what are the 5 elements, because if you don't really understand that, that means you don't understand the very, very basis of auditing. Second, ethical issues and auditor independence, because the questions are based on cases. So your understanding is very important. I also want to alert, because in the final exam, there are still ethical questions there. The third one, legal liabilities, still based on cases. So understanding is much, much more important than just memorizing the answers. The fourth one, the fourth topic is the overview of auditing process. So that means, so you need to understand what are the audit procedures, audit evidence, what are the assertions, what is the audit risk model, etc., etc. So for the fourth topic, it's okay if you don't fully understand all the contents, because in the subsequent lectures, tutorials, we are talking about them again. So I hope by the end of the semester, you should be familiar with that. Okay. So today, our topic will be about the test of controls. So in terms of test controls, that means we have already done the topic about understanding the control. So internal control topic from last week. Suppose you are auditing a company. There will be a few steps for us to do, right? So also borrow from your assignments. Once you accept the engagement, once you enter into the audit, what should be the first step for you to do? You need to understand the entity. By understanding the entity, you are assessing the company's business risk. And also, by doing that, you could also assess the company's control or audit risk. When you're understanding the business, so you would have also understood something about the company's control. So while you are understanding the business, actually, you also do something about assessing the company's control. So by understanding the company's business risk, leading to further understanding to the company's inherent risk, and also by understanding the company's control, you are also understanding the company's control risk as a whole or in some areas. So once you have the assessed business risk, inherent risk, and the control risk, you could determine the overall residual audit risk. And then you would be probably responding to the assessed audit risk. Still, in the whole engagement, for example, we say, okay, Telstra has a moderate risk for the whole engagement, but for their revenue, they have a higher audit risk. So your response to the audit risk could be about the whole entity, and could also be about specific areas. And then for those assessed risk, as an auditor, as an audit team, or as an audit partner, you need to develop your audit approach and, or in other words, audit strategy. If your assessed control risk is not high, you are going to adopt the lower assessed control risk approach. If your assessed control risk is very high, you tend to focus more about the detailed substantive test and adopt the predominantly substantive approach. The difference is how much you rely on the company's own control. So the more you rely on the company's internal control, the less you need to do in your substantive tests. And then the less your overall audit cost will be. Any questions so far? Then following on that, so if you decide to rely on the company's control, you have to test whether or not your assessed control risk is correct. So you do need to do your test of controls. That's what we are talking about today. Okay. The other thing I want to recap was the assertions. So in the assessment to the control and or also in the overall audit engagement, you need to know actually for the assertions, you have transaction-based assertions and the balance-based assertions. Those are introduced in lecture 4. So can anyone here tell me, so what's the difference between transaction-based or the balance-based assertions?
Transactions based assertions are obviously associated to transactions, where the other balances are associated to account balances.
So yeah, you're right. Anthony? Right? Okay, yeah. So so transaction-based assertions are relevant to those transactions. So if we look at the financial statements, it's more about the income statement. And balance-based assertions are about those account balances. So those are most relevant to the accounts in the balance sheet. Okay. The other page, sorry, okay. So let's do a mini practice here. So your audit client is a wholesaler of expensive jewelries. The individual item of jewelry are desirable, easily handled, and of significant value. So if here you are the auditor. So as we mentioned before, so the first step for you is to assess the business risk. And also you need to consider the inherent risk, control risk. than to have the over assessment of the residual audit risk, right? So just based on these 1 or 2 sentences, can you imagine what is a big problem in the business risk? So in other words, to interpret, so in terms of the business risk assessment, from this background information, what are the most important business problems, potential business risks in this case? Hello? Okay, so for a jewelry wholesaler, each item is desirable, easily handled, and also of big value. If you are doing this business, or if you are the auditor, what is the biggest business risk you could see? No risk.
Valuation of the jewelry.
Valuation of jewelry, why?
Generally, I suppose a wholesaler may have a lot of expensive jewelry that they will have on their books, and if the value of jewels were to go down or demand was to decrease, they might not be able to offload it.
So maybe the demand has decreased, but maybe the wholesaler wouldn't recognize this decrease in sales. They still note the bigger amount, the value, right? So this could be so in this analysis, what is the business risk? What is the audit risk? Actually, here you talk about something change, something has been the risk in the business and leading to something about the misstatements. Is it right?
Yeah, it's the risk of misstatement for the valuation of inventory. And I suppose, yeah, the business risk is overvalued inventory.
But what was the original business risk here? So the overvalue of inventory, overstatement of the inventory value, that's the audit risk you identified. Here, actually, the relevant business risk is a decrease in the market demand, or the overall decrease in the jewelry value, or the, the drop down of the jewelry value. So if, suppose that is the answer of this question. So what are the mitigating controls?
Obviously, the auditor would check what's the realizable value for certain jewelry in the market at the time of valuation.
Yeah. But how can you know the realizable value?
By looking at similar sales if they're available.
So similar size, similar price for similar jewelry. So if those price is available in the market, auditor can borrow that, refer to the market value. But for jewelries, the different design could be so very differentiate the jewelry values, right? So in that case, do you think the control on that is easy to do?
No.
No? Okay. Any other possible controls here? So here, talk about this control, assessing the controls. We are assessing the control of the proper value from this company. What about, so I guess, so for proper control to the jewelry value, the company should have a proper value or pricing policy. For example, they should have frequent updates to the price. And also yearly, when they update the prices, yearly the jewelry value, unless it is very unique, yearly the price should be dropping down rather than increasing. Is that right?
I suppose jewelry depends on the underlying commodities of the jewelry.
Okay. Yeah. So the proper pricing policy, pricing procedures could be a control. Is that right?
In a way, but it doesn't mean that it's going to be net realizable value. It's sort of like the cost. You know, you could be buying a diamond at 5,000 a carat, but it doesn't mean that you can necessarily sell it at that at the market. Like, it's, I suppose, where market supply meets demand.
Okay, so here we discuss a lot about the valuation risk here for the jewelries. What do we mean here? Here actually means, so at least for the valuation risk to the jewelries, it's very hard to control this type of risk. So that also means the control risk of this one seems to be very high. Is that right? So compared to rely on the internal control on this, probably it's better for us to rely on the substantive approach to assess the value of the jewelries. Do you agree? Okay.
Yeah, you'd rely on hopefully as many transactions you had.
Okay, so here, actually in my prepared answers, actually, I didn't focus on the valuation because it's very hard to discuss that. I focus on the potential theft of the inventory because the inventory is of large value for each item. So easy to be handled, easy to be stolen. So if we focus on that risk, on that business risk, we can identify the key counter risk, which is inventory. The key assertion at risk would be the key assertion at risk will be existence. So if we are able to identify the key assertion, key accounts at risk, of course we could consider what are the proper controls, right? And for example, in terms of the security of the inventory, the potential theft risk of inventory, we can do physical control, security of the warehouse, of the places, of the jewelry themselves. And then we can further evaluate the leading audit risk. Okay. So if the company do have the proper control activities in place, so probably we can rate a little bit lower control risk and then the lower overall audit risk. But if the company do not have the proper control, we need to rate higher control risk and then decide whether or not we rely on the control and how much substantive test we should do. Okay. So actually we haven't started today's lecture. We're still winding what we learned from last week. So the second area I want to address is the audit procedures and audit evidence, still from last week. And so please answer the questions here. So auditor has to obtain audit evidence. But what types of audit evidence? Sufficient and appropriate. And auditor's source of evidence can be obtained from test controls in relation to the control activities, and substantive audit procedures in relation to the details of the transactions, details of account balances. Okay. So I hope, because they are from lecture 4, I hope you can answer those questions. Next one. So what are the types of audit evidence still from lecture 4? Are you still here? Okay, so there are 6 or 7 main types of audit evidences here. From analytical evidence to documentary to mathematical, oral, physical, and electronic evidence. So the first 5, all those first 5 types of audit evidence can be converted into electronic ones. Okay. So on this one, just imagine for each of that, can you have at least one example on each type of audit evidence here? So I wouldn't provide you an answer in the class, but you need to come up with your own answer. For each type of audit evidence, please have at least one example. What we need to know is here. So for different types of audit evidence, usually when we're doing the auditing on any accounts, any area, we are not just collecting one type of audit evidence. We are going to collect multiple types of audit evidence. What we want is the evidence from each type of them should be corroborating with each other, should support each other, right? What happens if your evidence from one type is contradicting with evidence from the other one? If they are contradicting with each other, that means, so maybe evidence from one aspect is not so correct because of maybe the wrong sample, the wrong evidence collection procedure, or maybe the wrong audit plan you have made in the beginning. So the overall strategy in that case would be to do more tests or to recheck your audit plan. Then also from this list, so the evidence, the strength of the evidence could also be different. For example, in this list, usually what type of evidence tend to be very strong? If they are externally generated, externally circulated, tends to be very strong. For example, confirmation. So what type of evidence tend to be not so strong? Internally generated, internally circulated. So, for example, oral evidence. For example, some evidence just created by the company's management. Usually analytical evidence are not very strong one because they are indirect evidence. They are not the direct evidence from the direct subject matters in the company. Okay, another page. So about types of audit procedures. Could you just recall what are the methods and the techniques used by auditors to gather audit evidence? Are you still following? So in terms of the types of audit procedures, we do have inspection, observation, inquiry, confirmation, recalculation, reperformance, and analytic procedures. So do you understand all of them? I hope so. Okay, so I do have a few questions here. So in relation to today's topic, we are going to talk about test controls. Remember, test controls is usually about testing the control procedures, control activities, and the control activities is usually around transactions, right? So what would be the conventional audit procedures for test controls? So when we are doing the test controls, we have some conventional auditing procedures, observation. So look at the process, look at the documents, look at the whole procedure. Inquiry, so ask. This kind of inquiry could be orally ask, or documentarily ask. Inspection, and the other one could be reperforming. Reperforming means you are going to do multiple audit procedures in one area, on one item. Okay. So on this page, that is matching the audit procedures with audit evidence. I hope you have been through this in lecture 4 or 5, right? For example, if you are doing tracing, vouching, or inspecting, usually this is relevant to the documentary evidence. If you are doing inquiry, you can do the oral evidence or the documentary evidence, written evidence. If you are doing recalculation, of course, that's mathematical evidence. So the different types of procedures or the evidence can be matched with each other. And then by looking through that in pairs, actually you can also refer to the example auditing procedures. Okay. So we have provided the role of controlling auditing, the map in the learning materials. Please go back to have a look at that to see if you could understand the process or not. If you could understand the map, you should be fine from lecture 4 to 6. If you don't understand that, then you need to go back to study it again. Okay, so that's what we have done from the last few weeks. So now we move on to what we really want to concentrate in this week. Okay. So this week we are talking about the test controls. What do we mean by test controls? That means actually auditors need to get the evidence on the control. So why should the auditors get the evidence about control? Because as we mentioned before, when the auditors assess the audit risk, they need and also develop their audit strategy. They need to assess the company's level of control risk pervasively or in some specific areas. So if they decide to rely on the control, then they have to test if the preliminary assessment is correct or not. If it's correct, they can follow up with their audit plan. If it's not correct, they need to adapt the audit plan to do more substantive tests. So the test control is closely linked to the audit strategy and also close link to the level of substantive test in the end. So, but as we, so some of you were in the tutorial, right? So in the last tutorial question, we mentioned actually for small companies. So because a company actually has limited resources. So in that cases, maybe it's not applicable for them to have a 100% perfect control. So in that case, probably you are suggested, as an auditor, you are suggested to adopt the predominantly substantive approach. So that also means in a lot of cases, actually, auditors wouldn't want to rely on the controls. So in what situations controls will not be relied upon? Of course, if the control risk was very high, auditors do not want to rely on that. On the other hand, so if the audit engagement shows the control risk is actually more efficient or effective for the auditors to directly get evidence from detailed test rather than from control, auditors can skip the test control process. For example, when you are auditing very small companies, maybe the company for the whole year, they only have, let's say, for sales, payment, cash receipts, they may only have about, let's say, 200 transactions. So in that case, why would you bother actually to do the test control? You can just do the test on each of the transactions one by one, right? So you don't have to take more time to do the test controls, because to do the substantive, the predominantly substantive approach would be more efficient and more effective. On the other hand, so for each of for the audit, usually there will be a few areas that really needs the test control assessment. What are the normal areas? Usually auditors have to understanding the control, have to do some control test. What areas? So there are a few areas. Usually auditors need to do a little bit test control, no matter if they are going to rely on that or not. The first area will be sales. Why? Because sales, that's about the revenue of the company, and revenue is a fundamental source of the company's profit, right? So the selling, the revenue procedure is really important. So usually auditors will do some type of test regarding the control in the sales process. What could be the other area? Usually the test control is necessary. We mentioned sales. In your imagination, in addition to sales, if you are the auditor, what accounts usually you also want to have a test control? No matter the company is big or small. Somebody mentioned sales inventory. Okay, inventory is quite important. accounts receivable is also part of the sales. Accounts payable, they are also very important. So actually you just nominated a few material accounts, which we are going through in the next few lectures. But in addition to sales, so sometimes we may not focus on inventory. Sometimes we may not test the controls of inventory. Sometimes we may not test the controls on payables if this account is not so important. But usually we do need to do some test on the controls on one account. What is that? Sales is one, because sales is a root, is the source of profit. The other one, because that control is very important. Okay, considering your family. Financially, which account is really important? Is a primarily important account. You always have a control. Cash. Is that right? So usually, cash and sales are the two areas. So no matter you are going to rely on the control or not, auditors would like to have some test on the control. Do you agree? Okay. So when we are assessing the control risk, so I believe everyone here should know. So we are assessing the control risk and then leading the assessment in relation to the audit approach, and also your decision whether or not you're going to rely on the control or not. If you're going to rely on the control, we are going to do the test controls. So we go to the next step, okay? I just want to know you're still following me. Okay, so everyone here. So here we are moving more important parts of today's lecture, because we are going to discussing the design of test controls. So on this slide, there are a few important things we want to mention. So when you try to design the test controls, of course, you are based on your preliminary assessment to the control risk, and also your understanding to the business, right? But what are the key considerations you can summarize in theory? So when you try to design your test controls, you are talking, so actually you need to be careful about the nature of your business, nature of this account, nature of the testing procedures. So nature is important. Timing is also important. So because when you are doing the test controls, most of them actually should have been done in the interim stage rather than after the year end. You should also consider how much test you're going to do. Not too much, but still need to be sufficient. And also, when you are doing the design, you should also consider, first, whether those controls, proper controls, have existed. If the controls are existing, then are they effectively applied? And the third thing, are they continuously applied? Why? We are going to discuss that one by one. So first, let's talk about nature. So what do we mean by the nature of the test control? When we talk about nature of the test control, we are referring to the types of tests of controls, or the substantive test. Also refer to the types of evidence gathering procedures. Are you using the inspection? Are you using the observation? What type of audit evidence you want to collect in response to the cases you are facing? So when you considering the nature, actually, the specific type of the test control will depend on the characteristics of the control. So for test controls, as we mentioned in the previous slides, what are the common audit evidence you usually do? Audit procedures you usually do. What you usually do will be inquiry, observation, inspection, and reperforming. Because those four types of evidence audit procedures are around the transactions, around the transaction-based controls. So please have a look of this example about the sales. And here we just want to talk about one assertion about sales completeness. Of course, I provide my suggested tips here. But for sales, and also in terms of the completeness assertion in the sales cycle, in your opinion, what are the proper controls? Yearly? Okay, so because it has been listed here. Yearly, when we talk about completeness assertion for sales, we want the key documents, transaction documents are pre-numbered and also sequentially accounted for. And for sales, the most important document will be the shipping documents, right? And also, based on these, the central shipping documents, you also have the other underlying transaction documents like invoices, sales order, etc. So you need to match your shipping documents with the sales invoices and also other transaction documents. So here, those are the key controls for the completeness assertion. So that means, so the shipping has been done, and also all the shipping has been properly recorded in the matched with the other documents, and also all the transactions has been properly recorded in the accounts. And ensure the shipping documents are complete. We want them to be pre-numbered and also sequentially accounted for. Okay, so just based on this completeness assertion for sales, based on those identified key controls, in terms of nature of the tests, how would you design your test? Because one key thing is the shipping documents need to be pre-numbered. When you are going to do the test, you want to check those pre-numbered documents are available. Is that right? The other control is the shipping documents should be sequentially accounted for. Of course, when you do the test, you want to get the evidence the shipping documents have been sequentially accounted for. So you want to test the numerical sequence of the shipping documents. The other key control we have mentioned is the shipping documents should be matched with invoices and the other key documents. Doing that, you are going to get the evidence for the matching. So the test will be about a sample test. So based on the sample of shipping documents, you also inspect the corresponding sales invoices, sales orders are matching with the shipping documents. So do you get what I mean here? So no matter which account you are focused for, which assertion you are focused on, if you are able to identify what are the key controls for this account, this assertion, you should be able to design the proper test control. Is that right? Let me know. Just repeat. So for test controls, very importantly, you need to identify the accounts and the assertions at risk. Because for each account, each assertion, if you understand the business, you should be able to identify what are the key controls and also what are the key control points. If you are able to know what are the key control procedures and what are the key control points, then in responding to each of the key control points, you should be able to design the proper test of control. Is that right? Okay. So here also means, so even though we are going to give you a lot of examples, example test control, substantive test, etc. But actually, so the whole auditing procedure should be a more dynamic and flexible procedure. It's not a very rigid one. So you need to be able to adapt your designed audit in response to different situations. Okay. The other thing here is actually, if you are able to, so for the test controls we mentioned was the normal test control procedures usually involve inspection, observation, reperformance, and also inquiry. So please understand, also please actually at least know one example for each of the test control procedure. How can you do the inspection? How can you do the observation? How could you do the inquiry? How could you do the oral inquiry or the documentary written inquiry? And also, what is reperforming and how would you do the reperforming? Okay, any question here? Also, let's talk about timing. So in test controls, it's very important to talk about timing. Why? Because remember, so when you test a control, we want the company has a good control, and a good control means the control should be continuously across the whole year. So when you are considering the timing of test controls, of course, the test control shouldn't just restrict to the year end or after the year end. The test control should start yearly before the year end. Is right? On the other hand, so yearly when you are starting the audit, you should also consider your own the audit team's timing and also your own availability. So when you are doing the test, you don't really want to start very early. You want to do the audit concisely, effectively, but also efficiently and also effectively. So in normal cases, the test control usually starts 1 month or 2 months before the year end, but still by the year end and also after the year end, they also want to test if the control is effective throughout the period. So they may also have another bunch of the test control for the same account. Okay, but we know is that especially for an established company, usually the company wouldn't have a lot of changes in the control unless they have a substantial fundamental changes in the control system. What does that mean for auditors? To save their time, to be more efficient, if the company do not have a lot of changes in their control, maybe auditor do not have to do the repeated test control every year extensively. So what the auditors could do is for companies without substantial control changes in a year, what they could do is to get confirmed from the management, to inquire or observe the company's activity to see there's no substantial changes in the control. If they can confirm, then they probably could adopt a more lazy approach. So they don't have to do extensive test control every year. They could do that less frequently. Okay. Another point we want to address is extend how much test control we should do. This one is actually very simple. So the more you want to rely on the test control, the more test control you need to do. The higher control risk you have assessed in this company, and then the more test control you should do. But practically, so when you are doing the test, of course, you are referring to the sampling approach. And also, so it's very, very often when you are doing the test controls, very often you are going to use the reperforming procedures. Why? Because by doing the reperforming procedures, you are not getting the evidence from one type of audit evidence. You are getting multiple evidence for the same sample. Is that right? So if by doing the reperforming procedures on a small sample, that means actually you are able to get corroborating evidence. You should be able to get corroborating evidence throughout the whole reperforming. Of course, if you couldn't get corroborating evidences in the reperformance, of course, you really need to go back to redevelop your audit strategy, audit plan. Okay. Yeah, so the other thing we want to emphasize is about existence, effectiveness, and also continuity. Existence. So when you are testing the controls, when you are doing your own test controls, it is very important for you to ensure the proper control procedures are existing. So the company do have these policies there in their documents, documentary existence. Also, the company do have applied those policies in their practice. So existence of these control procedures in their real transaction. Okay, so that's about existence of the controls. After that, you also need to make sure, yes, they have these controls applied in their operation, but how effectively they are, of course, is based on the tests. So if there's allowable, so if the deviation of your testing results is allowed, is still within your tolerant level, it is effective. If exceeding your tolerant level, it's not effective according to your own auditing criteria. Continuity. So your desired controls, if they are existed if the results are effective from one of your test control tests, then you also expect this effectiveness is actually continuously existed, right? So, for example, if you do the interim audit test, for example, in April, that shows the company do have a good control in the cash. But when you do the second round of test control of the cash in June and July, you found actually the company do not have a control in June and in July. That means even though your previous testing result was effective, but the control may not be there continuously, that still means the company do not have a good control. Okay. All right. So by introducing existence, effectiveness, continuity, extent, timing, and nature, actually we refer to this table. This table is very, very important for us to design all types of test controls in all areas of the audit engagement. So now let's have a 5 minutes break, and then we come back to have a detailed discussion about how to do the test, how to do the test controls for the sales cycle. Because actually the sales cycle is the first example we have in this audit unit. And also yearly it is a primarily material accounts for all types of for-profit organizations. So let's have a break for 5 minutes, and then we come back from 7:06, and then we are going to have a, I hope we can have a quite good discussion about how to auditing the revenue, receivables, and receipts in relation to the sales cycle. And today in the lecture, we only talk up to the test controls, and the second part will be next week, auditing the revenue cycle, and also focus on the substantive tests. Okay, so see you in 5 minutes.